skills. So in this video, we go through literally the price action as what's happened this week. There is well over 100% which you could have made on the charts. We go through in quite a lot of detail. A lot of my old markups are still on the charts. I'll show you my broker feed from one of the significant trades that I took using the red news, which is pretty cool. Stick around if you want to see what actually happens with price action. It's not your standard backtesting, slightly different. So let me know if you like the format. Just doing the post edit and forgot to mention that the markup link is ready below. We got a 12-hour trade plus a couple of additional ones this week. So pretty good start. Join us. This has been a pretty decent week for us at FTR with how we trade. There's been quite possibly above 30R available again, just using the standard H4 and 15 minute. And I'm going to go through a standard backtest of the week. This is literally the current charts. I'm going to show you the trades that I took. Some of the ones which I would have missed, we're probably going to identify in a minute. And I'm also going to try and drop down to the 1 minute and see if we can get any scalps in there as well and improve the positions. So let's get stuck in. As always, we're going to jump back on bar replay just to the start of the week, which was over here. And we are going to initially jump onto the weekly and see where we ended up, because the understanding of BOS and CHoCH is slightly incorrect. Okay, so BOS and CHoCH, we do things differently with FTR. We do it just mathematically better than everybody else. Yet at the same time, it is not the be all and end all. It's probably third most important thing in the strategy. Market trades zone to zone. Okay, so what that means is that it goes to support areas and resistance areas, supply and demand areas. It goes to POIs and through POIs to the next POI. BOS and CHoCH gives you a 70-ish% chance of picking the internal direction between those zones. So the first thing that we need to identify really on the weekly is what direction are we going in? What bias are we picking for that week? Because as long as you've got the macro in mind, you know, what's actually happening, then everything else should be following that suit. You don't want to be swimming upstream against the current of big time traders, okay? So i.e. banks and institutions which have millions to push the market in ways which we can't, all right? So trend is down, went up to the EQ, like the halfway point effectively. So if we just do this real quickly, that's the sort of move there. It reached a sort of halfway point area and it started to reject. We ended up getting CHoCH right here. So weekly BOS goes down the bottom, CHoCH goes at the top. And since we've been in there, we've been in what a lot of people would class as a range. Well, the plus side is that we've actually got a lot of opportunities to trade within here. So price came up, just did the pullback, which is standard, reached the extreme. So we would expect price to press its way down now. So it came down and then it went counter trend again. This was the normal return leg, and then it went counter trend. It left behind a internal order block, okay? So this is an order block rather than just a POI. Left behind a weekly one, came down, got the internal BOS just going in the correct direction where it should be going, and is now currently on another pullback, okay? So that means that we might come up, sweep the liquidity from here, get into this weekly internal order block before pressing its way down. So that's the general consensus that we have. We went through this at the start of the week on Sunday evening last week to try and determine what we're doing. And we do that every week at FTR. So link is below if you guys want to join the community. There's probably about 100 traders in there or so, and some pretty decent ones too. However, what we had was an inside bar at the end of last week. So even though we're kind of internally trending upwards, and we have been for maybe the last 2 months-ish, we ended up just with an inside bar. So we didn't continue that momentum with much strength. So there is always a possibility for price to sell off from here, but really it makes sense following the price action, which is more important than anything. Price is going to press into here before it comes down. So really, we are expecting price to go up for the week. So if we switch over to the daily, bear in mind, these are my current markups. Like I've just left on the trades that I've taken, so I could talk you through my thought process behind those. But we're just literally doing the same with the daily, okay? So here's the weekly structure. The daily structure is falling within the weekly. So price was pressing down, came up, down. We got the CHoCH confirmation right there. We got an internal CHoCH right here with an order block, which is quite interesting because for the standard SMC traders, this here was really significant. It was significant for us as well, but it's because we knew that everybody else would be looking at it, okay? So that was significant. But we knew that it was internal because of the way that we do our BOS and CHoCH. So there was a chance for a reaction and then work our way up to here potentially, all right? Because even though this is a daily CHoCH up here, and we try to steer away from CHoCH and we try to aim towards BOS because there's 70-ish% chance of us getting BOS before we get CHoCH. Generally speaking, we know that the weekly is working up here. So weekly takes precedence over the daily because it's the macro, it's the higher time frame, it's more important. Okay, the daily showed a strong rally on the final day. So we spent the whole week sort of working our way down and then a strong final day on the Friday, pushing upwards. Just bear that in mind. There's no really significant order blocks around the place. There was this kind of like changeover candle. I don't know how to describe it. Buy to sell, sell to buy, something like that. But anyway, we bounced off of it. It was just essentially a rebalance. We rebalanced there and pushed off, which is sometimes all what it takes. We're expecting a break of this, potential activity within here, something which is left behind. Why? Because it's just on the way down, quite a significant area, and obviously so was this, but this was the last kind of like real attempted push up before a stronger, like an even stronger rejection. So we're expecting a sweep of here, a reaction out of here, so potential for something like this, then continue the journey. Okay, so it's really important to plan your trades at the start of the week using your knowledge of price action and structure. Bear in mind as well, I'm just going to say this, so I might be shot down for saying it. Structure is man-made, it's not a real thing. Like as humans, we have to associate things to patterns so we can learn them. Okay, it's just like when you're learning a language or learning how to count, you have to associate things to patterns. Structure isn't really real in trading. It's just not real. So, the thing which feeds trading is buyers and sellers and key areas of support and resistance. Why? Because banks trade in that way. So we need to be mindful of where they're getting in and where they're getting out, and bear in mind that that's where the market's going to be heading each time. It's going to be heading towards the next bank zone and the next bank zone, pass through a smaller one, head to the next one, and we're just trying to get on board with them. Okay, so that's what we're paying attention to, and price action as well can tell you 1,000 things more than what an indicator can. So bear in mind there's quite a few things which go into it. And I know for the, I mean this politely, but for the average trader, or say like the amateur trader, there's a lot which goes into it, and it may be too complicated to learn. But bear in mind, you're trading against people like me, and people like me are usually working for the banks. Okay, so I may not have the money of a bank, like I wish, but guys like me who are trading for the banks do have significant amounts of money behind them, and they can get into bigger positions. If you think that you can walk it by picking out a standard indicator off of TradingView and make money consistently, maybe you can, but I don't know anybody who has done that and made a living from it. So you've got to learn it. Unfortunately, you've got to learn how it really works. And at FTR, we've really figured out how the market works properly. So anyway, let's keep on cracking. Enough rantiness from me. Daily is very, very temporarily working its way up, but really kind of down. So a little bit iffy with the daily. I had it marked up here. Oh, I had it marked up here that daily was down, but short term up. All right, so H4 now, a little bit more on the screen. I've just kept all these on because it's current. We will move the BOS and CHoCH to fit where we currently are with price. Essentially, yeah, let's do that now. Okay, so H4, right? H4 BOS was up here, okay, and the CHoCH was here, I believe. Yeah, it was. So H4 BOS was up at the top, and then we worked our way down, and we didn't quite get CHoCH. All right, so this is where we differentiate from, I think, all of SMC, to be honest with you. And this rule change only came in January. All right, so CHoCH basically just moved to there and it moved to there. Why? Because there's no sustained power behind it. Okay, it got rejected every time. So we're still expecting BOS to be going upwards. And as I mentioned before, you got about a 70% chance that we're gonna reach BOS before we get a body break with CHoCH. All right, so it doesn't mean that we are going to hit BOS first. There are variants of it. So if you get CHoCH with a wick, but we don't bounce and get an internal break of CHoCH, you've got something like an 85% chance of CHoCH occurring in the continued direction with a body break. So, you've got a really significant chance of switching the trend over. But you only get all that by doing your back testing and also live trading and just gathering the information. We've got all the stats, which is really good, but there's a lot to remember, so sometimes you have to refer to the spreadsheet. Okay, so this is what we had. We had that internal, okay? So it was a 4-hour CHoCH internal, all right, with that order block around here, which is what everybody else was looking at. We were also looking at it just in case, and the reason being is that everybody else is looking at it, which makes it significant. It might be a reversal point, very unlikely, because usually what you have happen is price comes up to those areas when it's counter trend, becomes a short-term pullback, and then an aggressive push, and then that. All right, so it's usually like a short-term bounce, but it still usually bounces. So again, if you want to trade counter trend on something like that, it's usually not guaranteed, but it's usually the case where you can pull something out of the market if you really want to. So H4 is looking fairly standard. We've got an H4 like possible OB down here. Very not good. It didn't sweep anything. However, it did bounce. So it rebalanced the daily. All right, so it's rebalanced the daily zone. So if this breaks, we're working our way down to next H4, which you can see further on it does. And I took a long out of here. And then also we've got this one up here. Now, bear in mind, this one was an inside bar, which was identified a few weeks ago, and we've mitigated it by about 23-ish%. Now, usually on the H4, I would say that a mitigation of the halfway point is a solid mitigation for a reversal, all right? We haven't reversed, okay? Just bear in mind, we haven't reversed, we've bounced off of it. So chances are we're going to come back up, retest it and pull back again and then do something else. So it's still a mitigation. It's not as strong as usual, but same as rebalances, mitigations and rebalances, treat them more or less the same. Once an order block has been rebalanced or mitigated, it is significantly weaker because a lot of the sellers or buyers who are resting in that position have been used up with their orders, okay? And it just becomes less strong is the best way of describing it. Let's just start, hopefully. Oh no, 15 minutes, just go check this. Now, I took a trade off of here straight away. Monday morning is my favorite time to trade during the Asia session, okay? I don't stay up during the Asia session anymore. Got responsibilities in life. However, I always try to take a trade when there's a trending market. There wasn't a trending market this week. Mistake was mine. The reason why I'll take a trade in the Asian session on a Sunday night, Monday morning, is that the volume available is not very high during Asia, especially when you're looking at the Euro USD. It's not the Asian currency. So bear that in mind. It will quite often reach an order block and just bounce off it. You know, it will slowly zigzag somewhere else, unless there's a significant news event happening in Japan, which again is really rare. They don't have that many. And it's also one country, okay? So it's not really going to do too much. However, if you're in a trending market, quite often that is going to be the high or the low of the week. So it's worth taking that trade. And if you do get tagged in and you're still in by the end of London the next day, you might as well hold that trade for the rest of the week, or at least until like Friday afternoon when it gets to New York. And then that becomes a H4 inside bar, probably 99 times out of 100. So cut your trade at 6 p.m. UK time on a Friday, and that would be maybe 5 p.m. and that would be the most like furthest point that you can get, biggest trade that you'll take in a week. Anyway, there's a little bit of experience for you, so jot that down, backtest it. Anyway, let's click on through. So I get tagged in the middle of the night, 2:30, I think, 3 o'clock. And I remember looking at this in the morning, so there. I looked around about here and thought, oh yeah, I'm just about to take profit. And it came, I'm not joking, within like 0.1 or 0.2 pips. And I looked at it and thought, okay, it's going to TP in a minute. Got in a car, went out, went to go collect my little one. Forgot that I was in the trade. Next time I looked, it was stop loss. So one of those things, all right, it's just one of those things. You can't win them all. You can't, you know, even if you're statistically correct to take a trade in a particular direction, doesn't mean that it's going to happen. You know, it doesn't mean that you're going to win. Winning isn't everything. It's about your risk reward ratio and positive expectancy, which is what we have. We don't have a positive win rate. Okay, our win rate is like 25-30%. And you know, me being the like creator of the strategy, I still fluctuate between sort of 25 and 35%. It's the way that it is, but the very standard trades are usually like 8 or 9 hour, so it's very profitable. However, let's keep on clicking. I'm going to try to scan through this really quickly and just get to the trades which I took. And if there's any that we spot in hindsight or any key significant areas, I'm just gonna talk you through the thought process, which would happen in the live markets. Just one thing before we get stuck in. I've set up a MyFX book for a Red News trading account that I've created. Just had like a aha moment a couple of weeks ago, how to trade Red News. 3 wins out of 3 now. So I'd set up the MyFX book and the new account only a few days ago, got into a trade on Friday, and I grew the account by just under 10%. So, and that was with an accidental hedge. Well, it was a purposeful hedge, but it was an accidental tag in the wrong direction. So it was literally me fighting the markets. And the worst case scenario was I was going to be minus, I think, 7%. And I grew it by 10 in the end because I know what I'm doing. So pretty cool, but we'll get to that in a bit. Let's get stuck in. The target, by the way, so H4 is going to be next H4. So where was it? So this significant area, the daily, is heading up towards possibly up here. Okay, so this H4 up here, which is this one marked out because we've just bounced off of one, which was the daily, gonna work our way up to the H4, then work our way back down to the next H4. You'd be forgiven for expecting it to happen there. Now bear in mind, price is reacting from over here, and then we've also got price action playing up, okay? We're no longer showing that strength, we're starting to move around, range as people would say. Something's happening. There's orders coming in from the top, there's people trying to rebuy and press in higher. Just pay attention to price action when we reach these significant zones. There's the double tap. Now, I remember saying right here, I want to say I was live at the charts here. I was, for the first time in ages, I was off on Tuesday. So I was trading this. Okay, so yeah, I literally needed to think about that. These were literally equal highs. I'll drop down to the 1 minute because I'm pretty sure that I took a trade out of here somewhere, or I was looking to take a trade. Yeah, price was pressing down. We've got a 1 minute right there. We got CHoCH. Is that where I took it from? I couldn't have done, surely. A 1 minute right there and an equal high. So possibly there, possibly here. Oh well. The 1 minute is, okay, maybe it was there. The 1 minute is the same as the 15, all right? You're literally, everything's, I keep getting this word wrong, keep forgetting it, cyclical. The market's the same, doesn't matter what time frame you're looking at. It does the same things. So you're looking for pin bar rejection, you're looking for CHoCH, you're looking for aggressive candles, looking for outside bars, inside bars, and standard price action, okay? So the sooner you learn more about price action, the more opportunities you're gonna get. You're also gonna have the patience to wait for things which work. So just bear that in mind. There's plenty of opportunities in here. There's one up here which you may well have been stopped out of. There's this area right there which I would expect a possible spike into. This, what a hell of a risk, but still one there. There's now another one being left behind here, and this is all just after a significant area being hit. Just going to drop or move up to the M15 now, and it's, yeah, left behind another kind of not significant. This will, okay, so this will take place after we get a break of here. Okay, so let's just click on, oh, just one. So this is the last kind of like point of interest, okay? Support and resistance area, okay? It's also the EQ of this kind of structure being created. In about an hour or so, we'll check the H4. Okay, so let's just click on. We get a tap into there, okay? So you could be getting short right out of here. And if you did, okay, so this is one, obviously, which isn't marked up on my charts. Your target, I'm gonna have to jump to H4 now. This next H4. So that's the full target that you'd want to go for, okay? So that's the full target. There's multiple places where you would want to take profit along the way, or you know, don't move to break even. I made that mistake a couple of times this week. Trading scared, like, you know, I'm still human, I still make mistakes, and it's now not even ego driven, it's, you know, it's distractions of things in life. First TP is right here, okay, so the same structure time frame, 4.26, that's cool. Next one is likely going to be there until you just get a break, which is most likely going to happen. And then it's just going to be the tip or just before it, the next high time frame POI. Okay, so 14 point, I thought I said 25 before. Anyway, 14% if you're trading 1% risk. Additionally, let's have a look on the 1 minute and see if we could have improved on that. Okay, so the entry would have been triggered, which is cool. So a trigger of an entry right there. Where is CHoCH on the 15 minute? You don't have to wait for CHoCH, by the way. It's already fairly significant. You don't have to wait for CHoCH. In this instance, I would. There's nothing strong enough for me to say I would want to take an order directly off. So let's just click through one by one and see if there's anything left behind. This, no, not anymore. There we go, just as well, because you'd have been stopped out if you did take anything. It's coming in deeper. Does this even work? That's a decent one. Oh, pushing up. Now it's pressing down. Oh, let's just fast forward a bit. Okay, so a scary hour, 2 hours. Oh, and a pretty decent one there as well. So this is gutsy, but you can certainly do it. There's a trade right off of there. Again, I'm just going to point out on here as well, I will rarely, if I'm at the charts, if I can help it, I will not use pending orders, okay? That is a tool for dummies, okay? Like, I don't feel like I should have to explain it, but you're trying to catch a falling knife. I do use them, but if I can help it and if I can be at the charts from my alerts going off, I don't use them. I will use a stop order or a market entry. And even with the market entry, sometimes I won't get exactly 1% or 2% or 4% or whatever risk it is that I'm trying to use on that particular trade. Sometimes it would be a little bit more or a little bit less because I have to move the stop loss to fit. But my position size per pip is always calculated. So sometimes I'm a little bit over my risk, what I'm comfortable with, sometimes a little bit under. I wouldn't have had the retest anyway, but it has left behind another one there. Anyway, I'll take that one off because it would just get confusing. So let's go to the M15 and see where we're at. So we're already in that trade, which is cool. There wasn't a retest or anything on the 1 minute, although it's kind of now left behind an inside bar. So there's a possibility of getting another short in. And there's also this which has been left behind, which, to be fair, if we get a break below here, that will become insignificant, which we do get. Not convincing, but hey. I'm going to go back a little bit to here so we can check the daily. So again, fairly significant. What has happened since the start of the week is we got a little push up on Monday. On Tuesday, we got a pin bar, okay, and it was a bearish pin bar. We'd come up, we'd swept above everything else, we'd mitigated something here, and it looks certainly now, like pretty certainly, that we are working our way down to at least here and probably to the next H4, which I think was down here. And there's also a 5 second but very large, it was 5 seconds, but it was an order block from a red news event the previous week. So, or maybe the week before. Still significant, but only on the 5 second chart. Okay, that's happened. Obviously this is on here already because even though it's not formed as an order block, it does later. Maybe I should just clear my charts up next time. I hope you guys are keeping up a little bit. The H4 as well is telling you a story. Press up, press down, push up again. So at the end of Tuesday, midday-ish, like, New York start, you'd be thinking, okay, the range is up there to down here. I wouldn't be too comfortable taking any trades. You still would, but like you wouldn't be comfortable to take them. And then we got that break. So pretty much it should just be a sheer drop straight after this. So again, understanding price action, understanding candlesticks is critical. Nice. Another one there, possibly. That one would have been stopped out. This one would have worked. Literally just shouted that out just then. So there was another one right here. Would that have got a tap? It would have hit. So there was actually another one right here, which I'll just draw on real quick. That'd be one for the journal. Missed opportunity. So that'd be the final target down there, 23. But the initial target would be just to the breaker structure right here. Just the same time frame breaker structure. Okay, you just want to make sure that it's going to continue in the right direction. Because if price, then I'm going to do this real quick. If we get the breaker structure right there, that then makes this the high of that structure. So chances are price is going to come back to this area, retest it because it's the extreme before coming down. So you don't really want to lock in break even. You just want to get above the highest point. So the most you would lock in on this trade is like minus 0.5%. So you would still take a bit of a loss, like a minus 0.5 if price came up and swept you out. Okay, so just bear that in mind. There's another trade there which I didn't see before, but only when I was flicking through with you guys. We'll drop down to the 1 minute. Not great on the 1 minute, doesn't look superb. It's only the 15 minute which makes it look good. And sometimes that's the case. 15 minute looks fairly decent with a pin bar. It didn't pause, but we're just going to go back and look at the 1 minute. Got a strong push down. That looked like a news candle. I think I remember saying in the group what had happened. Don't know. Flash news, I think. Price came back up, tapped in perfectly, and we were getting short. Gonna check the 1 minute. Was there anything significant? No. CHoCH occurred right there. Okay, maybe. So I am gonna go through this just on the 1 minute and just show you really what you're looking for as a scalper. Okay, so I'm showing, you know, the core strategy, which is the 15 minute and the H4, but you just need to pay attention for if you're looking to scalp. The same rules apply, literally the same rules apply. This is going to be the 15 minute CHoCH, which is right here. Price went up, tagged you in on the 15, okay? Sorry, this is the 1 minute CHoCH. The 15 went in, got tapped in, great, you're in a trade. You're waiting ideally for a significant pin bar reversal. So you're looking for like a red pin bar to press down. But instead we just got like a really strong aggressive move down. We got the break of structure, i.e. CHoCH in this instance, with a body pressed up. As soon as you get this break as well, right there with that red candle, you can go off of any order block. So I'd have said there, actually I think I did take a trade off of that. I think some of the other guys in the group did as well. So there's a trade right here, trade right there, and you just want to get involved. So if you missed that trade, or even if you did get involved with it, you get the opportunity of getting another trade in. I have a feeling that a few of us did this and a couple of us missed it by like a fraction. And again, the target can be literally just that structure there. It could be here, or it could be where everything else is, which is all the way down here, okay? So ideally, you'd want to take partials if you can, just so you're banking something. I have started taking partials. I've said to people for a long time, oh, don't bother with partials, because like you just don't need to. But I have found recently by taking partials, and I'll show you the broker log of the red news trade. I took partials, and it really helped with my mentality. So maybe partials isn't a bad idea. So I am starting to change my opinion of it. There's pure profit, and then there's also mental state of mind. And I think mental state of mind is more important than profit, to be fair, especially at the moment for me personally. So anyway, was that the trade that I just mentioned? Yeah, 40R, okay, it's insane, but that's just the 1 minute. Okay, also bear in mind, okay, I just want to point this out. If there are unmitigated OBs behind you, setting your target for the extreme target is very, very risky, because there's nothing stopping price from coming back and reclaiming an unmitigated OB before pressing down to the intended target. Okay, so some of these may need to be managed, but that's your significant target, what you could do. See, that one, that's lucky, isn't it? So just as I'd marked it out as well, and there's a possibility, I think that this was the same risk reward ratio, because I'm sure that I got into this, or I know that a few traders in FTR did. And bear in mind, like I've said it a few times, but the link is below if you want to join the community. Like, there are periods where it's really quiet because there's no active trades going on, like there's nothing to do. But generally speaking, we all learn together, we all trade together, we all work together. We're all in it to help each other and for all of us to become profitable traders. So, you know, if you feel like a community is the best thing for you, join the community. And we have launched as well, I forgot to mention this, but we have launched the markup service, and I think it may have been this trade, but there was a 12-hour trade, 11 or a 12-hour trade, which was shouted out on Tuesday and Wednesday, and it came out to fruition. So the link for that is below. You can just sign straight into it and join in for a month. If it's worked out for you, great. If you don't like it, cancel your contract. So we do have that available now as well. So we are launching. Again, just a bit of a soft launch, just going to mention it on a couple of videos, but we trade the best way possible, and that's the FTR way. So, you know, there's elements, I guess, of SMC, but we're traders, not bullshitters. So anyway, right, let's, I can't quite see that candle underneath there, but there is another potential OB down here. I'll mark it up if it comes in, but there's another one there. Yeah, so that had mitigated there. So that's mitigated. That was internal at that point, so you wouldn't be taking a trade off of this one, but this one you would after that little break, ideally off of this one as well, but we'll see. Oof. Okay, so with that, that one would have been a fail. That other one would have been a fail. This one is getting retested. So what I just say about if there's something left behind, there's nothing stopping price from coming back to reclaim it. So if we just go and have a look and see where a significant place for this was, like if you'd have taken profit just at the rebalance of that area, it's 16R, but it reached 20. The thing is, you'd be partialing out at certain places, or you may partial out at certain places. This would be fairly decent, but it just shows how much you can make. So anyway, we'll put that back. So 2 losses, and this one is being retested. So you'd be nervous, but then again, if you haven't looked at the charts since you marked it up and you don't look at it for 6 hours at a time, you'd still be in for now. Oh man, stop. I'm gonna stop pressing that button. Need to go back to the 1 minute and see if we did anything up there. Plenty. Now, it's worth pointing out at this moment in time, I think it was the Wednesday when there was a backtest done by one of the traders in the group who I really respect. He's put in a lot of effort and a lot of work the last few months, and I trust his markups when he puts them in. And he did a backtest, I think, of just Wednesday, and there was over 120% available if you're risking 1% per trade. Obviously, it would be multiple trades at the same time being held, like 6 or 7 trades, so you would need a big leverage, like 100 or 500. And you'd need balls of steel as well, like, you know, to be able to do it. But you can literally see here where the entries would have been. Okay, so you get CHoCH right there. You've got potential for an entry off of there, off of here, off of here, off of there. There's tons, there's absolutely tons of entry. A loss here, a loss there, a loss, maybe a partial here. Oh no, a loss there, a loss there. An entry off of there. So yeah, another win. And bear in mind, if you're still holding those, you'd be up. Yeah, I think that, you know, the 100, 120, whatever, Matt, shout out. Phenomenal, like absolutely phenomenal. And the other trades, so it may have been this one which was called out. Was it? Yeah, okay. I said 12R. But there's this one up here, which would have worked out, 23, this one, 14. But there's like 30 plus whatever you've taken out of that. Again, significant. Now I'm just going to jump to the H4 so we can just see the structure of what's happening. And we have literally gone from H4 to the next H4 as expected. So quite aggressively pressed down into it. And we've also left behind this now internal EQ. So if we look at the structure from there to here, or there to there, this is like the middle bit. So again, sorry, it's a little bit messy on the charts. Go there, the EQ is literally where that red line is now, which I'll get rid of because it is just too much on the charts. Get rid of that, it's the EQ. Okay, so EQ right there, there's an extreme internal up there. If we take any longs out of here, okay, so on the 15 minute or the 1 minute, our target is literally just going to be the tip of this H4. Why? Because it's counter trend at the moment, all right? So it's kind of pro trend, main structure, but counter trend at the moment. So down to the M15, what have we got? We've got, oh, I still got it marked on. Okay, cool. So we've got this internal high right here. Why? It's an inside bar. We have rules for when and where to use those. Again, really powerful if used correctly. If used incorrectly, really dangerous. But anyway, we ideally want to try and get a break of that at the very least. We want to get a break back out of this H4 and a break above here with a body break. Now we just got an equal high, okay? So drop down to the 1 minute. What was that equal high looking like? A couple of very key rejections, okay? So it's looking like we're not going to get that break which we want. There's another OB up here as well. So if you think of it like this, we've got liquidity forming above all of these highs. So in my head, it's kind of go up to here and press back down, continuing down where we want to go, okay, at least for the time being, because it's a very, very small H4 order block, okay? So the H4 is literally tiny in comparison to everything else. It looks more like an M15, okay? So the coordinates, it is just, it's like 8 pips, you know, that's the size of an M15. Also, it didn't sweep anything. It's not a very strong one. It's just a reaction point. Really, it's a POI. Our actual target is going to be down here, this H4, for anything where we're getting short. So look back at the 15 minute. Does anything happen? I'm not sure, I can't remember. So nope, it's left behind a nice order block right there though. If we get this breaker structure, oops, pressing the wrong button. No, but we did get a press right here. So let's move on. Can we get to the next H4? A couple more, then we can check the daily. Okay, so we'll look at the daily again. What's happened in that day? Very significant drop. So here we go. There's the daily right there. Okay, so we've now got a daily extreme pin bar, which has been formed. We got the very aggressive previous day, which was the Wednesday, which means there is the possible incentive that, you know, we're expecting anyway, the weekly to go, it was above anyway. So we're kind of looking at this, tap into something significant, work our way into that, tap back, go up to there and go down there. Okay, so price action develops. That's why you need to check the time frames when it's time to check the time frames. And you can set alerts and stuff to do that. You could just set alarms on your phone or your watch or whatever. We'll check the H4, came down, got the internal EQ now, okay? So we have got a body break as well. So we now get a move of CHoCH and BOS. So we're just gonna move BOS to where it needs to be, which is there. CHoCH goes to the highest point between the two breaking points. So now on the H4, we're expecting that price may come up to one of these areas and then press down into here, or we're going to get into here first, okay? So we're kind of at like a 50-50 stage. If there's any significant example of an order block to get short on, we will. But if adversely, if there's any possible advantage of going long, we will do as well. Okay, so they're like pretty much 50-50 trades. Sometimes you can get tagged out of both of them. Sometimes you get one being a winner and the other one being a loser. And other times price will just develop a little bit and you'll cancel both trades. Okay, so again, price action. So let's click on a little bit and we get another press down, decent press down. There's another trade to be able to take off here. It's a 5.25 trade. This must have been one which I took. So it's already on the chart. tapped into. Don't even remember it, but yeah, cool. Okay, so there's a trade right there. Bounce now off the H4. We'll just have a quick look at what this looks like. Not amazing, okay? So really not amazing. This is pretty much the same on the 1 minute as well. This is a 5-second order block, all right? There's a 5-second sort of like jiggle around, but it's just a wick. So this whole kind of zone, I wasn't that interested in unless price action was. And what we've got is a bit of a slowdown. So we'll click on, what time was this? Thursday. Was this the time when I took that long? It is. No, so I woke up about 7:45, I want to say, 7 o'clock, and set the trade at this point. We'd got the reaction, we got the price action, we got the bullish candle. We haven't had CHoCH, doesn't matter. We got internal chop with the inside bar. You know, do I jump the gun? Possibly, but again, it's price action. Understand price action, you'll be fine. We know a bounce off the H4 can be enough. We're not expecting, you know, we're not waiting for a mitigation of the halfway point. A bounce is fine as well, especially with the time of day. Asian liquidity sweep, etc., etc. You know, Frankfurt has opened. Got the tap into it. Check the 1 minute quickly. It was fairly obvious. Oh, here's another 1 minute that could have been taken, to be fair. So that was the 15-minute tap. I was literally tapped into this, it was good. It was an accidental close. So I took, I don't know, I think it was about 4 or 5%. Should have kept hold of it all day. But there's another 1 minute right here. We've already had the CHoCH on the 1 minute, which is cool. Worked our way up. Again, another boss. We've got liquidity being formed under here. On the M15, it makes sense. So it kind of makes sense on the 1 minute as well, that we're going to be changing direction. This would be your 1 minute trade. And if you do that, then your 1 minute, again, go on, small stop loss. I know a lot of people say you can't use stops that size. Like, you know, there's different trading styles compared to what you do. So you can. 25R is a target. Again, just a reminder of that target. It's just the next H4 zone, which is that, all right? It is the supply coming into the market. So I'm just going to click on quite quick because I'm quite conscious this is probably a long video and it was meant to be about 10 minutes long. There you go, TP. Were there more opportunities to get involved? Yes, you can see them. Okay, there's an opportunity here to get involved after the break. You would have got it. Another one here, which you would have got. The risk reward ratio would have been a lot smaller. Maybe on the 1 minute, there's potential for further entries. Nah, I wouldn't have done any of those, to be fair. Nah. Not strong enough on the 1 minute, but on the 15 minute, yes. Oh, and a reaction off of this inside bar, which I didn't mark up. Short term. Reaction off the halfway point of the H4. All right, so we'll check the 1 minute. Again, if you have your alerts set in the right places, and I know this sounds like, well, this is literally, not even hypothetical, this is historic. You know, I didn't take all these or anything, obviously, but Thursday I was day trading. No, I wasn't, sorry, not Thursday, I wasn't, Tuesday I was. We got CHoCH right here, price working its way down, you would have got a stop right there. CHoCH right there, you'd have taken a stop out right here and not got an entry right there, but you'd still be looking for places to enter. There's plenty, there's absolutely plenty. Oh, keep going. Nearly there now. This might be the red news event. Coming up to it. And we've missed checking the charts for the daily. I'm pretty sure you don't want to see that because I can't be bothered either. H4. How are we looking? Bounce off of this H4, which is cool. Worked our way up. Literally mitigation of the halfway point. Says that this whole area is used now. So if we come back to it after breaking away, so we've left another one. Sorry, I need to move this to its correct place. There. So if we come back now down to here, this is not going to be used again. Okay, so that, I'm just going to delete that, get rid of it. Our target is going to be the daily, which is up there, and then the target's going to be the H4. Okay, so drop down to the 15. Got a red news trade coming up, I think. Oh no, there was another trade there. Was there? I want to say there was another trade entry there, but I can't remember. That was the red news trade. Okay, so that was the other trade of the morning. Again, counter trend-ish, but there was a significant trade. So, right, so this is the one which I marked up. I think I shared it in the group, but I didn't actually place it on my charts because I just completely forgot. So yeah, a bit frustrating. Did I do that first thing in the morning? Yeah, I did. Yeah, so it's just before I left the house, marked it up, didn't place it on my broker, missed out on, yeah, around about 7 or 8 hours, something like that. And then we had the red news happen. I'll just put my broker feed on the screen just to show you. I'm gonna blank out the account number because, well, I don't want it to be empty when I go back to it. I made that mistake before. Get rid of my head for a second. Here we go. So balance, pips, etc. Obviously, I got whipsawed into the move. Quite frustrating. There's my gross. The gap, like, ignore that. I knew this was a risk that it could have happened. Just show you, that's where I got it wrong. And that's where I got in the first one. And then I doubled down because I was hedging. Then I was slowly exiting out of the position and I got out exactly where I needed to because we knew statistically where it was going to reverse, so I did it. But that was meant to be a half close, but C-Trader on mobile phone, quite difficult to use. So I ended up exiting from the whole position and that's just what happened. So ended up with a balance of just short of 1,100. So call it a 10%. It's a 9.8% day, which is cool. Just from the one news event. And if you can figure out what I did from this, good on you. You can trade it as well. And I'm back. Okay, so there's that, and hopefully we're coming right to the end. If we come up to this key area, nope. The price kind of sold off, and I wasn't paying attention because I was busy. However, yeah, price reversed in the end. Got into significant trades. This was the red news event. And I think we pretty much closed up the week around there. I would expect anyway, yeah. So there we have it. You know, there's the 15-minute, the H4 to daily. We'll just look at how the week ended as well. Another, like, you know, a press down. Let me clear this up. An outside bar, doji. Price is a bit undecided, but I'll tell you why it should probably be going up. We'll check the daily quickly. How did that finish? Yeah, bullish-ish. And then the H4. Oh, for the first time ever, it's not an inside bar. Oh, it is. You know, should be going up, to be fair. I don't want to go through and calculate it, but there's probably 100R there, more, you know, probably more than 100R, especially if you are entering on the 1 minute within the 15-minute POIs and the daily POIs and doing it correctly. Luckily, we do cater for people who can either swing trade, you know, using the daily and the 1 hour, or the 4 hour and the weekly, or if you want to day trade using the 15-minute and the 4 hour, if you want to scalp using the 1 minute and the 15-minute and the 4 hour, or if you want to really scalp like me and use the 5 second with the 1 minute and the 15-minute, you could do that too. So it's good, FTR is great, link is below, and the markup link is also below, so you can just sign straight into that if a community isn't there for you. See you in the next one.